Welcome to the Digital Agency Growth Podcast. I'm your host, Dan Englander. Welcome to the Digital Agency Growth Podcast. I'm your host, Dan Englander. So, my big announcement for you today is that my book, Relationship Sales at Scale, is available for pre-order and it comes out on June 13th in a few weeks. And to read you the official blurb, here it is. In a world of noise, competition, and skepticism, spamming your prospects with undifferentiated pitches, case studies, and sales collateral is like yelling at a brick wall. On the other hand, going old school and trying to personalize every touchpoint 100% is unrealistic and unsustainable. The few people you manage to contact might not notice or care, and when life gets busy, your sales activity grinds to a halt and your pipeline runs dry. So what if the answer is combining the new school with the old? Instead of going in cold, how much faster would you grow if you could identify and open doors with the prospects who live within your circles of influence and are already primed to trust and do business with you? Relationship sales at scale is the new selling philosophy for our age. It marries the timeless power of tribe-based trust with digitally enabled scale so that you can open doors tastefully and convert prospects consistently, all without spamming anyone. So again, it's written by me, Dan Englander. I'm the CEO and founder of this company, Sales Schema, and the book's stories, strategies, and hands-on resources are grounded in thousands of outreach campaigns conducted since 2014 among almost 90 organizations, mostly in the agency, B2B, and professional service spaces, all designed to secure opportunities between clients and hard-to-reach prospects, including the leaders of some of the biggest companies on earth. A few things that you will know by the end of this book: you're going to learn how to balance personalization and scale to keep your pipeline full and achieve reliable and predictable growth. You're going to learn how to condense 5 years of networking into a single week-long campaign so you can batch up warm referrals into specific ideal accounts. You're going to learn how to de-risk conversations with highly skeptical prospects by leveraging strong personal commonalities instead of boring publicly available information like saying, "Hey, I saw you tweeted about this thing. That's cool." You're going to learn how to divide up prospecting and sales duties so that you can avoid burnout, even if your team is small or even if it's just you. You're going to learn how to leverage dozens of actual copy examples, campaign strategies, and get access to online resources so that you can launch and close deals in a matter of weeks, and much, much more. Relationship Sales at Scale is going to reshape the way you think about new business overall, and is going to give you the tools and strategies to scale reliably, whether you are an owner, a dedicated salesperson, or in any growth-focused role, even if it's a hybrid one. So if you'd like to learn more about the book, check out the resources in it, or if you're ready, pre-order it ahead of the June 13th launch. You can do that by going to salesschema.com/RSAS. Again, that's salesschema.com/RSA. Marcel, very nice to see you again.
Great to be here, Dan. Always a pleasure to hang out with you.
Yeah, likewise. And I love talking to you because more than many, you have your finger on the pulse of profitability, numbers, and all these things, which I'm guessing have been pretty interesting over the last couple of years. Before we get into that, can you talk about your background, Parakito, and kind of how you're approaching this issue?
Yeah, I'm the CEO and founder at Parakito, and our sole purpose at Parakito is to help creative and digital agencies run more profitably. That is our expertise, and we are not a technology company purely. We're not a financial company or accounting firm. We're a technology leverage service company, and essentially what we take care of is the 80% of your operations that your CFO or your bookkeeping firm is not paying attention to, so that you can accurately measure exactly what's going on in your business and make better, more informed decisions and really take control over your profitability. So there's a lot of different things that we do to help clients get to that outcome, but that's really our main focus.
Gotcha. And just so listeners can kind of wrap their head around that a little bit, because people might be listening and they're like, okay, I have a bookkeeper, I have a financial coach, consultant, I have different people doing different things. Can you take us through like a typical client that you're onboarding and just kind of like what you're doing day 1, day 5, day 50, et cetera?
Yeah, for sure. So most of the time when clients come to see us, there is some sense that there's just not visibility into some of the important numbers that they need. So when they're pricing a project, a lot of the guesswork is happening around, should we discount this? Should we not? Like, how badly do we need to close this deal? What kind of margins can we expect on this? Like, do we even have a consistent pricing and scoping process? And then for further into the business, what kind of clients and projects are more or less profitable than others? Like, what are the patterns that we're seeing in our burning efficiency? What are the patterns we're seeing in utilization? And do we have any forward visibility? Like, are we able to get out ahead of forecasting resources, forecasting cash flow? So those are the kinds of things that our clients typically do not have visibility into, that they want to have visibility into and need to in order to scale, make better decisions, et cetera. So the first process is, of course, we do an audit. That's the first thing we do with every client, where we basically lift under the hood and take a snapshot of everything that's going on in the business, really get clear on where is money leaking out of the business, where are the opportunities for profitability, and how does changing each metric actually improve their bottom line and what's possible for them. A lot of agency owners are not even aware of how profitable their business could be if they were just pulling a couple of simple levers and optimizing a couple of metrics. And then from there, we go into a liftoff phase, which is where in the span of 4 to 6 weeks, we actually go through and design and build the kind of foundation for agency reporting in their business so that they can get visibility into their capacity, forecast their capacity, and then start measuring the patterns and profitability across clients and projects, and as well measure utilization. And then from there, we work with them on an ongoing basis on some kind of a retainer model, I suppose, where we can start to enhance that reporting system, add more detail, make it more custom to them, as well as coach them on how to actually interpret and act on the data that they're getting to make the agency more profitable. So there's this kind of 3-prong approach that we can take. Clients can choose to just do one of those things or 2 of those things, but most end up doing all 3 and make a lot more money because of it.
Yeah, that's super interesting. One question before I get into hopefully more interesting things is at what point do people need to be at to get value from you? You know, what level of reporting do they need to have in place and so on?
Yeah. Yeah, it's a good question. It's less about what they need to have in terms of infrastructure. I mean, we've worked with clients that had their their financials in a spreadsheet. They weren't tracking time. Like, there's really no infrastructure for operations in place. The more important consideration is they've got to have figured out, at least to some extent, how to get clients. And generally, they need to be doing more than $500,000 in revenue. Like, usually $1 million in revenue plus is where this starts to be a very high value lever for them to pull, is coming in to work with us. Below that, the focus really should be on, making sure you know how to get clients, you have a process for that, and it's repeatable. Get to a scale where you've got 5-6 people on your team or more, then this is probably the right time to start looking at improving operations and working with us.
Yeah, that makes a lot of sense. And to get to kind of how you define your business and everything, you describe yourself as a technology leverage service firm. Can you define that? Like, what does that mean?
Yeah, it's a really good question. So it's kind of like I would think of ourselves as the Terminator almost, right? It's like we're half agency, we're half tech company. And the primary difference is we don't sell our technology. We sell the service that our technology enables us to deliver. But the technology allows us to do things a lot faster than we otherwise would be able to if everything that we were doing was manual. And so a lot of digital agencies will be familiar with this kind of thing. It's like, hey, we use this AI tool for optimizing ads so that I, as a human being, don't have to go and actually run analysis on 80 different headlines that we tested for this campaign. Similarly, we've built a bunch of technology that helps us quickly run analysis on profit and loss statements, analyze time tracking data, clean data, and reorganize it. We've built a lot of reporting systems. And so that technology enables us to do things for small agencies that we would otherwise have to charge a lot of money for, and we would only be able to do for large agencies. So that's really the fundamentals of it. We use technology to make our process more efficient. Of course, we make more profit because of that, but we can also go down market.
Yeah, that's super interesting, and I think it would be really helpful for people to kind of hear about the trajectory of Parakeeto a little bit. I think when we first had you on, it was starting with the tech platform, and now you've adapted the service, and it sounds like you switched to the service for the better. It sounds like it's been really successful, but it's definitely goes against the grain of everything you hear. Like, all we ever hear is software is eating the world, go from service to software, et cetera. So I'd love to hear what inspired you to move towards being a service, and how has it panned out so far?
Yeah, it's a really great question. So we spent almost 3 years trying really hard to be a SaaS company and to build software to solve this problem. And the original product was very, very broad and ambitious in terms of its scope of all the different problems that it was going to solve. And it led us to the conclusion that, well, actually the one of the main challenges in the agency space is not that the math is hard to do. Like a lot of these metrics are not hard to do the math on. It's that the data isn't clean. And so our response to that was, okay, well, let's reduce the scope of the product and focus on where the data gets created, which is estimation. So, those of you that have known Parakeeto or have seen us kind of crop up over the last few years know that at one point we were selling software that helped you create estimates faster and easier. And so our thesis there was like, okay, well, if we can control the structure of the data when it's created, then clients can grow into this larger solution with us. And that was like 3 years of really banging our head against the wall. And I think the punishing thing about software is like it's so expensive and so slow to iterate, and you kind of have to like be really, really good about the assumptions that you're making in order for that process to not be really expensive. And if you're just even a little bit wrong, like you're writing code, you're writing sets of assumptions that are going to be repeated thousands of times. And if they're slightly wrong, then you're screwed. And I think it took us a while to kind of realize, and we eventually came to this intersection where it was like, okay, the scope of that product is too small to be useful. The scope of the previous product is too large for us to be able to do it in a bootstrapped way, which is something that was important to us. So we reached this intersection where it was like, we have two choices here. We can raise a ton of money, build a huge engineering team, and really take on a ton of risk and make a whole bunch of assumptions and build out this really, really big product that there's a ton of surface area for things to just not be quite right and continue to struggle to find product market fit, and basically be a part of what we realized was the problem, which is this massive ecosystem of tools for agencies that nobody actually understands the strategy on how to use. Or we can go in another direction and just manually do a bunch of the things that we know need to be done and help clients get more value out of all of the great solutions that already exist for doing things like tracking time and managing projects, et cetera, and really focus our technology on what we felt was the missing link, which was collecting data from those different sources and making sure that it's clean and organized before it goes into a report. And so that's really the transition that we made. And the thing we say all the time is there's a ton of software in this market, but there's not enough solutions. And the question we asked ourselves to design the service offering was like, if we could solve this problem any way that we knew how, what would be the best possible solution? And it had to involve expert consulting that was not biased to a specific software platform, because that's really what most people have access to is I'm going to enter, ERP or all-in-one agency management platform, and their customer success rep is going to give me the consulting on how to set it up, but it's ultra biased. And a lot of times they're just kind of forcing me and my business into a way of working that suits their architecture, as opposed to having someone that's truly objective guiding that process. So that's kind of how we ended up. And what's interesting is our investors, like there is a macro thesis in the market that's starting to play out where you're seeing a lot more SaaS move into services, and you're seeing technology leveraged service become a much hotter thing, because I think people are realizing this. There's been this massive fragmentation of tools. The complexity of the ecosystem that the average small business is playing in is significantly higher than it was a decade ago. And there is a need for this more hand-holding process to getting their business problem solved, because with the rise of Zapiers and all these other things, and the 3,000 time tracking tools that you could choose from, and the 500 project management tools that you could pair them with, it's becoming really, really unruly and hard to figure out what the right solution is for you. So I think that's part of the reason that, I wish I could say that this was some insight that I had because I'm a genius and I watch the market at this macro level. It wasn't. I was lucky. But I think what's happened since we made this transition is we've realized that actually that's a thesis that is playing out in the market at a higher level, and services are hot again. They're coming back into the tech space.
Yeah, that makes a lot of sense. And to kind of dig into that a little bit, when you say technology leverage service, does that mean that there's like a core technology that you guys own that's proprietary to you that you're using, and then adding on other things as needed from off the shelf? Or can you talk about that technology a little bit and what it does or doesn't do?
Yeah, so that's exactly it. It's like we have a proprietary technology. We also have proprietary methodologies, but our customer is our own team. And that's a really important distinction as a SaaS company, because I think what we realized was, especially when you have good engineers on your team, like figuring out how to get technology to do something is usually not that hard, right? That's like 20% of it. The 80% that's hard is making it look good and intuitive and be, scalable, and having the right user onboarding flow, and like making it easy for people to understand in the 30 seconds that they're giving you to convey to them how to use the product to get the outcome that they wanted when they start a trial. Like, it's all of that stuff. And everything gets slower when technology goes from being internal to external. Change management gets slower, speed of iteration gets slower, like the cost of doing something gets a lot higher because it has to be so much more polished. And so that was one of the big levers, that when we started taking the technology inside and saying, like, we pay everyone that uses this, the burden of it having to be perfect and smooth and polished, like that really expensive last 20% of optimization that takes up 80% of your resources, we took off the table, and we're able to move a lot faster now. We're also able to do things like use an off-the-shelf tool as opposed to trying to build it from scratch, because it's just a faster way to enable functionality and then build behind that once we know the requirements. So like, we've done a lot of stuff with Google Sheets and really pushed Google Sheets to the edge of what's possible, because rebuilding Google Sheets is really expensive. And so if we can avoid doing that for a period of time, then we will, and we'll just leverage that tool. So that is essentially it. There's a core technology, but what it's enabled us to do in terms of speed, having that be internal, has been a game changer for us.
Yeah, that's super interesting. And I love that concept of like the last 20% taking, this Pareto distribution of the investment up front. And that makes a lot of sense to me. Like the idea of having something that's ugly but just kind of works, because and it's fine because the people shoveling coal in the back don't need it to look pretty. I know that's probably more pejorative than it should be, but anyway, that's a really, I think, useful concept that makes a lot of sense. And with that, I think tied to that, you talk a lot about the concept of outsourcing risky work. Can you get into that a bit? Like, what does that mean, and what does that look like for most agencies?
Yeah. So, I mean, this is just an insight that you and I were kind of discussing before the podcast. We do a lot of audits, and we've been doing a lot of them lately. And we've seen this clear pattern where there are a lot of agencies that outsource some or a lot of the delivery work in their service offering. And consistently, they're highly profitable, much more profitable than the average agency that we do an audit on. And I think the big insight there is, if you kind of zoomed out, if you're listening to this and looked at your service offerings, there's probably this similar like 80-20 rule, where there's like 20% of the work, or 20%, I suppose, of the value in the work. So that's probably what's really going on, is if you sell $100,000 contract, there's probably 80% of those hours that are worth 20% of the revenue, but also make up 80% of the risk on that engagement. And the agencies that are much more profitable consistently than others are the ones that are taking that work that's high risk, low value, and outsourcing it to a white label partner, and then hanging on to the high value, low risk work, which is strategy, client relationship management, really the higher level stuff in the engagements, and just not being accountable for the profitability of the work that's low value and high risk. That's a big idea, but I'm seeing it in the numbers. It is consistently giving people really, really high profit margins, and they don't have to go all the way to white labeling and outsourcing all of their work. It can just be a specific part of their process that they can carve out and take a ton of risk off the table for themselves, and a lot of operational headaches as well.
Yeah, I love that conceptually, and not to put you on the spot, but is there a case study you can dig into? Is there a recent example of this, just to help people wrap
Yeah.
their heads around?
Yeah, so two in particular, SEO agencies. There's two SEO agencies that we looked at recently, that a lot of the stuff that you would expect an SEO agency to outsource, like backlink building and to some extent content writing, or at least like the very mechanical parts of writing content, a lot of the very mechanical parts of, some of the more technical optimization going on in client sites, reporting, right? A lot of this very repeatable, very procedural work, they're outsourcing to white label partners, and it's working incredibly well for them. And then we have another agency that's kind of on the complete other side of the spectrum, doing mostly creative work. And of course, in their space, some of the highest risk stuff is like video production. But again, they're partnering with production companies, getting the production company to take on the risk of that video production, and they're retaining the client relationship in the creative direction, which is the highest value part of that. And again, they've got super good profit margins. And now they're starting to do it also with other high risk deliverables like campaigns and websites, where they're finding really good partners for the execution, but they're hanging on to the highest value thing, which is the creative strategy, that kind of stuff, and the client relationship. Both of those agencies are getting, like all three of those agencies actually, because there's two SEOs and one creative. Like most of the agencies we see, average billable rates are somewhere around $155 an hour. They're all south of 200, some of them in the high twos. And so it's just way easier for them to be exceptional, to run well, to make investments, because the cash flow is so much better.
Yeah, that's super interesting. And I think with that, like a lot of the conventional wisdom that I've heard has been like, hey, if you're a service business, you're supposed to have 30% net margins. And then if you're way above that, that means you're probably not investing enough in growth or in hiring ahead of time. And if you're below that, then you're not financially stable enough. Do you think that's still true? Or do you think that with this technology empowered approach that those numbers are changing? Or like what does that look like now?
I'm kind of in agreement with, you should be able to achieve 25% operating profit or more, and 25 to 40 seems to be like the right range. And then, yeah, maybe you could grow faster if you spent more on sales and marketing. Maybe you could grow faster if you try to get, greater share of wallet. But a lot of that stuff just becomes subjective. Like at the end of the day, it's your choice. What kind of business do you want to run? How big do you want it to be? Like we've got a client, they're going to do probably $10 million this year and have a 35% net margin on that. Like I wouldn't be in a rush to shake the tree a whole lot if I was in that situation. That's a pretty great business. And if they're continuing to grow 50% year over year with an amount of consistency that's impressive, like, then is there really a reason to dramatically reallocate capital, add a bunch of complexity to the business? My argument would be no, but that's a choice that the client is able to make because they have the financial efficiency in the business to be able to make those calls. So I think the argument that like you're leaving money on the table might be true, but I don't think it's quite that hard coded. But what I will agree with is that a reasonable profit margin that's achievable for an agency that's performing well is around that 30% mark, give or take.
Yeah, that makes sense. And I think one thing I'd love to get into is just kind of the life cycle of an agency and like what happens when, right? So we talked about,
Yeah.
0 to roughly 500K or something is about getting clients and kind of finding product market fit. Maybe that's actually up to 1 million.
Yeah.
Not, this isn't to ask you like what are the total, specific hires across the board, but if we're thinking about financial responsibilities, controllership, that sort of thing, what do you think should happen to win? 0 to 100, 100 to a million, million to 10 million, however you define that, if that makes sense.
Yeah. So typically what we see is that path from like 0 to 500K to a million, right? Essentially just finding product market fit. Can we sell this thing? Can we do what we sold? You're really flying by the seat of your pants, and that's totally normal. I think a lot of agency owners get insecure about how unsophisticated their operations are when they're that small, but it's like, hey, everybody's operations are unsophisticated when they're that small, because it's just not your priority. Your priority is like figuring out if you have a real business, and you don't really know if it's real until you get to around $1 million, because like before that, you're probably just selling a whole bunch of different things. There's a lot of inconsistency. So when you hit that scale though, you're probably, you've got a small team now, you've got payroll to make. And if you are not creating good margins in your work, you're going to start to feel it at that juncture more than likely. And if you're listening and you've been in this situation where you're like, holy shit, we're so busy, but yet we don't have any cash in our bank account, and I'm worried I'm not going to make payroll, then you've known this feeling of like starting to realize that not all revenue is created equal, and that the efficiency of how you earn that revenue really starts to matter. So at that juncture, usually you've outsourced your bookkeeping and accounting, I would hope. Usually the lowest hanging fruit there is really sitting down and having a deliberate conversation with that service that's helping you with your financials, and making sure that it's properly structured so that you can see your delivery margin, you can see your agency gross income, and you can see, the ratio of spending for, what you're spending on delivery, what you're spending on overhead, and trying to break that down ideally into sales and marketing, administration, and facilities. If you can get that kind of visibility out of your financials, you've probably got enough to, if you're getting monthly financials, get 12 shots on goal to steer the ship. And then you probably also have a project manager at that point that's kind of dealing with day-to-day project management, maybe dealing with some client communication. And they're going to take on a lot of the kind of grunt work, I should call it. Again, not a very endearing term, but I guess that's a theme that we're both going to carry through this episode. They're shoveling the coal in the project management tool. And it's just, I think, really a question of sitting down with them and making sure that like the way they're setting things up, the way they're managing projects is aligned to the kinds of patterns that you want to see in the business, because you're probably still going to own operations at this juncture. So you've got a PM, you've probably got a fractional bookkeeping accounting team. And it's just a little bit of structure goes a long way at that juncture. So you can start to see some patterns in your client work. And then usually if you can get enough visibility to just make sure that your delivery margins are like reasonable, that should be enough to get you up to that 20, 25-ish mark. That's when you start to see another ceiling because you're installing like your first full layer of management. And as an owner, you're probably at that point getting all the way disconnected from client work. And now the level of sophistication in your operations needs to take another step function increase because you now need to give other people on your team visibility into performance so that they can be accountable to how well their team's doing. They can do their job well. So, your project managers and your director of operations at that point, or your operations manager, they need to be paying attention to utilization rates. They need to be paying attention to average billable rates or delivery margin on your client projects. So at that juncture, like you probably need a manager that's overseeing projects and accounts and is really accountable to like, are projects and clients healthy? And then you as an owner are probably still going to own the agency-wide metrics. This is where we come in, by the way. Like most agency founders don't have this competency and don't have a co-founder on the team that have this competency and can't afford to hire, a very experienced COO, nor do they have the volume of work for that experienced COO to really do. And so until you get to that 100, 150 people, you can afford to bring in that very expensive hire and actually give them a scope of work that's appropriate for their compensation. We can bring that strategic approach in a fractional way that's right sized for the agency. So shameless plug. That's why we exist, because there's this vacuum that starts to get created. And the issue that I see most people run into at this juncture, especially at that 25-ish juncture, is they look to their finance team and they're like, hey, can you solve this problem? And the finance team says, yeah, but they don't really understand, I think, because they can't. Finance data is not enough. They're not really going to have the comfort level or the scope to dig into your project management tool, your time tracking data, your resource planning. They probably haven't even ever talked to you about like, what is the model for accrual revenue recognition? Like, how do we know what percent complete a project is at the end of a given month? Or if you're doing your accrual accounting, you've never had that conversation with your accountant, massive red flag. That should probably be discussed. So the accounting team's not really qualified for this. You ask your project manager or your operations manager to do this, the likely outcome is they're going to optimize everything for their local minima. So you'll have a ton of detail in the reporting, but you're not going to have a lot of accuracy, or it's not going to be able to ladder up to higher level insights that you need at the business level. And so you kind of have this vacuum that gets created where your project manager is over resourced and isn't really qualified to do this off the side of their desk. Your CFO just really isn't comfortable getting in the weeds, and you've got a gap to close there. But you need to close it at 25 to 30 if you want to get to the next level, because without having some form of consistent reporting here, it's going to be very, very hard to hold a team accountable and make sure that they've got visibility into projects and clients to keep things profitable.
Yeah, that makes a lot of sense, and there's a lot to piece apart there. But it sounds like there's a pretty big level off point that happens that you kind of need to appreciate. And I think part of that, I'd love to do a little sidebar on churn, right? Because churn can be really contextual. For me personally, it always sucks losing clients, and I don't care how many consultants say, hey, this is normal. And I know that rationally they're right, but it's always like, what do we need to change? How do we need to prevent this? How do we prevent this from happening, and so on? So I love to hear about that. Like a project-based agency is going to have a different relationship with defining churn compared to retainer-based. And even within retainer-based, a performance-based retainer agency is going to have a different one than somebody that just does a creative service or something over and over again. So I'd love to hear your thoughts on that and what people should aim for.
Yeah. So are you kind of looking for like a churn metric benchmark?
Yeah. In a way, but
Yeah.
I'm open for it being contextualized to different situations.
Yeah, of course, like if you're familiar with SaaS, you'll know this is an incredibly hard metric to benchmark. The first reason for that is because the basis for churn is never really clearly defined, right? So you talk to 10 SaaS companies and it's like, okay, well, we count every trial sign up, and the other SaaS company only counts them as a user once they put their credit card in. And the other one only counts them as a user when they put their credit card in and they hit the 3 activation milestones in their onboarding process. So like the basis is all over the place. Similarly, it's a lot clearer cut for an agency where it's like, okay, they're paying you, they're on a retainer, they're going to churn off. But I think the first thing to think about here is like, let's really clearly define churn. And I would encourage you to measure it as revenue churn. And actually, if you want to be even better about it, more deliberate about it, I would measure it as AGI churn, because that's more important. And the difference there is most this is incredibly important if you run a digital agency and you have a lot of pass-through revenue coming through. So ad spend or things that are coming through you and passing on to other vendors. You want to strip that out and look at the true value of that retainer. And I mean, ultimately, you want to try to keep that to single digits per year in terms of revenue churn. I think that would be a reasonable target, but so much of this is going to change based on what market you're in and how competitive your market is. Like you and I both know that churn percentages are much higher in small business and substantially higher in very small business because the market attrition is just higher in those verticals, right? Like the amount of people that start a business and get to 2 or 3 employees and then close up shop, the turnover in that kind of just getting started is substantially higher than the turnover of businesses that have gotten to over $1 million. They're much less likely to go bankrupt and substantially less likely to go bankrupt if they're doing 100 million or $100 billion in revenue. So size of market, who you serve, as well as the competition for services and like how well positioned you are all factors that are going to have a massive impact on your churn. So do some research on, it's kind of like prime plus on an interest rate. Like the prime rate is very different if you're in a VSMB market than it is if you're in an enterprise market. So do research on what the baseline attrition in your market is so that you can benchmark yourself on a churn in a relative way. Because if you find out that like, hey, 12% of businesses in my industry close every year, then it would be unreasonable for you to have a target for churn that's lower than 12% a year. Does that make sense? Because the market is just going to churn at that rate.
Yeah, that makes a lot of sense, and I think it bears repeating. And I think a lot of people listening who are already maybe hand wringing about what niches or what verticals to focus on, as the hesitant we all do, it might encourage that even more. So I guess one question is like, you've worked with agencies serving like every vertical under the sun, it sounds like. Is there any rhyme or reason to that? Are your clients that are focusing on a bigger target company doing better than the ones that are focusing on pizza joints through the pandemic, or like how are you seeing that play out?
Yeah, it's a really good question. And this is where I think I have an unconventional answer, because most of the people that you're going to ask about this are going to be like, well, of course you want to position yourself as a category of one and charge more than everyone else and be the premium brand. And like, it's true. It's way easier to be profitable when you can charge more than everyone else. It's way easier to be profitable when you can, really start to detach what you charge from your cost basis. But you can also be very profitable selling a commodity in a highly competitive market. I think what you really have to consider is 2 things. This is my POV. Number one, what are my strengths as an entrepreneur? Am I a great operator, or am I a great salesperson, a great marketer, a great whatever? Because if you're a great salesperson, great marketer, that's your strength, then you probably want to go and pursue a niche, pursue a market, pursue a client that allows you to have that advantage from a pricing perspective to help you compensate for the fact that you might not get everything right on the operations side. And, if you've got a 70% margin on every dollar that you earn in the business, you got lots of room to mess up and still be very profitable. And you can make a lot of investments in growth that are not efficient. Whereas if that's not a strength of yours, then you probably want to pick a place where you can outcompete people from an operations perspective. And it's like, because we're really dialed about our processes and how we do things and we measure things well, and we're very deliberate, we can win by giving ourselves enough margin to come in and compete, give our clients a really good, clean, consistent experience without having to win the marketing and sales game and come up with some magical way to position ourselves and be a category of one. I think both strategies are legitimate, but it comes back to this understanding of what are our strengths as operators in the business and what's the game that we actually want to play. How do we want to compete from an operations perspective? And then from there, it becomes a question of what problem do we want to solve? Because we can get very technical about picking a niche and think about it in terms of verticals or horizontal niching, vertical niching, service offerings, businesses we're going after, the size of business we're going after. But ultimately, it always just comes back to what problem do we solve? And then mapping that to who has that problem in a way that is more expensive than other people, or that is substantially underserved relative to other people, or that they don't have access to a vendor that claims specialization in that niche, or that doesn't understand the nuances of it. Like what we do, as an example, applies to anyone who sells time. We could apply this to lawyers. We could apply this to accountants. We don't. We focus only on agencies. And I think we're able to offer a much better service because of that, because our data is more consistent. Like we see more clear patterns. There just is more specificity. And I think we're able to do a better job because we literally turn away accountants and lawyers and gutter cleaning companies and things like that. So I think there's something to be said about, we started with the problem. We knew service businesses had trouble measuring this stuff. And then we really paid attention to like, who's got this problem worse, and it's costing them more money than anyone else. And agencies were clearly a fit.
Yeah, I think that's really great. And another part of that is like the next best alternatives that the market's comparing you to, right? Like a mid-sized law firm might be comparing you against some full-time accountant that's out of Harvard or something, versus an agency of 20 people isn't really thinking about that the same way. So I think that there's a lot of repeating. So Marcel, kind of getting towards the end of our time, I'd love to hear just like what's going to keep you busy the next 90 days. Like, what are you guys working on at Parakitas?
Yeah, I mean, we've got a really good problem, which is we can't keep up with all the clients that want to work with us. And so we're really in the process now of trying to scale up our team. And that's just been really fun. So I'm trying to poach operations managers and COOs from big agencies that have, scaled things really big. And I'm excited to just bring those kinds of people into the company and watch them apply our methodology, which I think is really unique. And I'm going to have a chance to, I'm going to frame this as a good thing, because part of it's hard, right? Let go of being the person that's always in the weeds with clients, because I love getting under the hood. I love talking to agency owners, and I'm going to continue to do that. But, I'm going to have the opportunity over the next 90 days to empower other people to do that and create value with our systems and our tech and our framework. So that's the focus for me over the next 90 days.
That's awesome. And offline, and maybe on a future episode, we can get into your poaching SOP, which is definitely a hot button issue in this labor market. So, Marcel, how can people follow what you're up to, get in touch, et cetera, et cetera?
Yeah, head on over to parakeeto.com. Check out the Agency Profit podcast on anywhere that you get podcasts. And Dan, we just released a great episode with you where you brought your sales science to our show. So definitely check that out. And if you want some free tools to help you start measuring the basics in your agency, check out parakeeto.com/toolkit. And I've got an entire set of resources there, including training videos, templates, tutorials, et cetera, to help you kind of get off the ground and start measuring things better in your business.
Awesome. Thanks so much, Marcel. We'll get all that stuff linked up. And yeah, let's do it again before long.
Thanks, Dan.